You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey trader, want to get rich quick? Well, good luck with that. If on the other hand you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
#15th day of September 2020. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at cfrn.net. On the right hand side, click the big microphone, follow the instructions. In about 30 seconds, you'll be registered for life. That gives you one-click access to the show every day. What happens is you register once using that link from the home page, click the big microphone, and then every day you'll get an email right before the show reminding you it's time for the show to start, and in that email is a link that you click that gives you one-click access. Now, that also gives you access to the chat box so you can ask questions, participate in the discussion. There will be days you're out of your office, away from your desktop, so just bamboozle an internet-connected browser from somewhere, from somebody, and just point it to cfrn.net facebook.com/live. There you'll find a live real-time simulcast of the show as it unfolds. You just won't have access to the chat box, but you could still ask questions in the Telegram discussion group. And during this live broadcast, we also stream live on Facebook, on YouTube, and Twitter. With that said, let's open with a word of prayer. Heavenly Father, we come to you today asking for your guidance, your wisdom, and your support as we begin this broadcast. Help us to engage in meaningful discussion. Allow us to all grow closer as a group and mature the bonds of our community. Fill us with your grace, God, as we make decisions that may affect the lives, the futures, and the incomes of everyone in this office, everyone in this audience, everyone that's a part of the CFRN family at large, whether you're an actual passport holder or just a part of the CFRN family. We pray today that this broadcast would be a blessing to you. Open your eyes, open your ears, open your mind to see and to understand things that in the past have been an obstacle. We pray today that those obstacles, whatever they might be, would be overcome. And God, please continue to remind us that all we do here today and every day, all that we accomplish today and every day, is in the pursuit of truth for the greater glory of you. Not money, not man, but you. We ask these things in Jesus' name. Amen. Okay, happy Tuesday. Let me give you the numbers from around the world. These are the cash markets, or the indices, as they're called. Pull in some fresh data. Gold slipping, dollar recovering. All right, starting here in the U.S., first of all, the Dow is up 97 points. NASDAQ up 163. S&P 500 up 29. Russell 2000 up 8. So some pretty quiet trade, although the NASDAQ is up 1.5%. Now, in the commodity basket, crude oil up 59 cents, trading 37.85 last. That's a gain of 1.5%. Gold down $4.30, trading 19.59.40 last. Silver down a nickel, trading 27.30 last. And in the Asian markets, at the close, Nikkei posted a loss of 104 points. Shanghai gained 16. Hang Seng gained 92. Again, pretty quiet trade, no movers, no shakers. And in the European markets at the close, FTSE up 79. That's a gain of 1.25%. The DAX up 24. The CAC up 16. That gives us a mixed day in Asia due to the Nikkei being in the red. It's a green day in the UK. And so far, a big green Radio Tuesday here in the US of A. With that, we'll go to Michael and get a recap of everything that happened this morning in the live training room. And when he's done, I'll be back. We'll take a look at the daily chart. We'll take a look at the Concierge Trade Alerts and the Logic 247 alerts. All that and more when I return. Michael, I see your charts are ready to go.
Okay. All right.
You are
Yeah.
locked and loaded. How's Jake's ankle turn out?
Well, I haven't had to take him to the hospital, so
Okay.
he's getting around. He's hobbling around right now.
Oh,
I'm
good.
thinking about getting him a cane or a crutch.
Yeah, crutch might be good just to kind of keep a little pressure off of it.
Yeah, that's what I was thinking. But yeah, get a motor.
Just walk out in the woods and break one off a tree. Carve it up real nice.
Yeah, there's actually a place down there we used to live that has a whole bunch of bamboo, and that would make a nice one. At least cane or something.
Yeah.
I don't know. We'll figure it out.
You'll figure it
I guess
out.
we're not going not going hiking anytime soon.
All right, I'll hit mute on my end. It's all yours.
Okay, thanks. All right, good afternoon, everyone. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today is the 15th day of September 2020. Today we made 5 ticks in crude, 38 ticks in gold, and 16 ticks on the ES. That put us up plus 630 on the morning session. Today it took 23 minutes and 2 trades to get to the goal for the day. At that point, we're up $100 a contract, and we took a total of 10 trades. So on the month now, we're at $7,063. That's with 1 contract over 10 trading days, averaging $706 per contract per 2-hour trading day. It's now been 146 days since I've had my last negative day. That's 146 business days. On the year now, we're at $70,519. That's over 171 trading days, averaging $412 per contract per trading day. Now, if you want to become part of the CFRN family, we've made it very simple for you. You just need to come here to this page, EminiFuturesTrading.com, and just follow the instructions. Okay. So now let me get into it here. We'll start with gold. Now, I had 5 trades on gold today. There were a couple that I missed early on. One right here would have been a break even. It looks like one right here that would have been profitable. One right here that would have been nicely profitable. Then we finally picked one up right here. And on that one, we picked up 5 ticks. That's where we actually got our goal for the day. We had another one right here. There we picked up 4 ticks. Missed one there. It got choppy here for a little while. Okay, then we had a nice YVR and BBC bounce trade right here that I missed. The YVR trades, when you get into the chop like that, the YVR trades are usually really good. Like here and here and here. And that was all chopped. We didn't have a regular trade set up in there at all. Then we had another one right here where we picked up 10 ticks to put us at plus 19. Another one here where we picked up 5 ticks to put us at plus 24. I missed this one. Yeah, the last one right here was 10 ticks. Yeah, I think it was 10 ticks. Or 9 ticks, I'm sorry. It was 9 ticks. And that put us at plus 38. Just didn't write it down. And that was gold. During the break, there was a YBR trade. One right here. And that was it. Okay. I guess you could take this bounce off the BBC right here down. Both of which would have been profitable. Okay. No, we didn't do anything with the euro again. If I can see the whole day in one screen, it means there wasn't very much activity. There was one shorting opportunity right there that I missed. And that was it on the euro. All right, on crude, we had just one trade that we actually did do. There was the one that's set up right here. This is the one we did do. We picked up 5 ticks. That was our first trade of the day. YBR. YBR. And that was pretty much it on the morning session for crude. Like Dwayne said, no movers, no shakers. I think everybody's waiting, holding their breath for the FOMC tomorrow. All right, on the ES, let's see. That's what I thought. Our first trade was right here. We picked up 12 ticks on that one. Second trade was right here. We had a break even. We missed one there. We missed one there. And then we picked up 4 ticks here to put us at plus 16 on the ES on the morning session. Okay, now during the break, there was a YBR there, a YBR there, and a YBR there. So there was some good opportunity on the ES today. All right, so now let's go back here. Not there, here. All right. As I said, if you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today is the 15th day of September, 2020. We made 5 ticks in crude, 38 ticks on the ES. 38 ticks on gold and 16 ticks on the ES. Put us at plus 630 per contract this morning. And today, it took 23 minutes and 2 trades to get to $100 per contract, and we took a total of 10 trades. So on the month now, we're at 7,063. That's over 10 trading days. So we're averaging $706 per contract per 2-hour trading day. It's now 146 consecutive days that I've gotten my goal. On the year now, we're at $70,519. That's over 171 trading days, averaging $412 per contract per trading day. Okay, if you have not become part of the CFRN family and you want to, just go here to eminifuturestrading.com, follow the instructions, make your choice. Okay, and with that, we can pass it back out to fabulous Phoenix, Arizona, Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready. Okay.
Here we go. Alrighty. Recap of the recap.
Today took 23 minutes and 2 trades to get to $100 per contract.
Good job. Good job.
Thank you.
Now, let's see. Was it tomorrow or Thursday? We have some pretty high impact news coming out.
Tomorrow. Yeah, we have FOMC tomorrow.
At FOMC, we got crude. Then I think on Thursday, we have some jobs numbers. Correct?
Let me go check it out. I do know for sure that we have FOMC coming up. Hang on. Okay. So today we had pretty light news. Most of it was good. Tomorrow we have core retail sales, pre-market retail sales, business inventories, NHB housing market index, then crude, then FOMC economic projections, FOMC statement, federal funds rate, and a press conference, and then tick long-term purchases tomorrow afternoon. That's tomorrow, so we have a lot of news tomorrow. On Thursday, there's a lot of stuff in Europe, but we have ADP non-farm employment change, Philly Fed coming out, and unemployment claims, building permits, housing starts, and natural gas. That's what we have on Thursday. And Friday, we just have current account, CV leading index, consumer sentiment, and inflation expectations. So there's news for the rest of the week. It's just not all high impact. Tomorrow's the highest impact day.
Gotcha. Okie doke. Well, let me just finish editing this. Motion over there. Okay, so everybody knows that we're fully rolled over into the December contract on all the futures. S&P, Dow, Russell, NQ. Also currencies, Euro. Okay. All right. Now, what Michael does every morning for 2 hours is he teaches you our underlying strategy, the underlying methodology. The indicators themselves, we haven't changed the line of code in, I think, 8 years or more. The basic rules to the trade setup, nothing has changed in just as long. And the reason that that's a thing, it's a thing because consistency is probably the one thing that traders miss the most. You go in, you put on a trade, you hit your target, life's good. And then you put on another trade and you hit your target and life's good. And then the third one comes along. And by that point you figure, I got this wired. Then boom, boom, boom. Things don't turn out exactly the way you expected. And so what's the first thing a trader will do after a couple of stop outs is they'll start tweaking the whatever indicators they have on there. They'll start trying to tweak those or tweak the strategy, or it's called curve fitting the data. It's trying to adjust whatever you've got on your chart, adjust it in such a fashion that it would have made today a miracle instead of a mess. Well, we don't do that. Okay. Now, we know that the market is constantly changing, ever evolving. However, the market does the exact same thing every single day. It just does it each day in a slightly different way. And so you as a trader, you with your methodology, you have to become the constant integer in the equation. You have to be the one thing that stands fast. Your business has to have something to anchor itself to, and that has to become you. Most of you have probably been through numerous trading rooms, trading groups, bought different indicator sets, and they've all made you some pretty stout promises. That's why you bought them. Somehow, doggone it, once you've got it on your computer and you're actually starting to try to put it to work, it just doesn't seem to work out the same way. And then when you need some help, you get in trouble, you're upside down, there's nobody to talk to. You could maybe send a note to the help desk, and you might get an email back in a couple days. There are very few places that even answer their phones anymore. Our broker answers his phone, usually by the third ring. I'm talking about Bird at 866-928-3310. Most places, even when they're answering the phones, you have a hard time actually speaking to a broker. But when you call Bert, he answers, and he actually knows what you're talking about, because he's not just a broker, he's also a trader. He puts on and takes off trades, just like you and I do. He uses our methodology, he uses our strategy, he uses our indicators. So when you call him with a question, he speaks the language. The different little buzzwords we have, like BBC and WTZ. He's well familiar with all of that. And so when you start with us, the idea is we want you to first learn the strategy. Okay? There's no sense to put real money to work in live markets till you first prove to yourself that you actually have got the strategy down. And it's a very simple strategy compared to a lot of the things that you may have tried to learn, where you have to keep your eye on 10 different things. The MACD and the stochastics and the Boltner and the Keltner, and the trend and the tricks and the advanced decline. And I'm not knocking any of those things. They all do what they were created to do. However, if you understand the basic principle upon which markets work, price is always going to be drawn to support. And once it finds support and can go no lower, it's going to be drawn to resistance. And when it can go no higher, it's going to be drawn back to support. So learning to understand that, learning that basic principle, being able to look at a chart and understand not what's going to happen next, because that's not possible, but to understand what the next high probability move is, that puts you leaps and bounds ahead of most of the professional traders out there on Wall Street. Now, the two alert services, while they look different when you're putting them on your chart, you always got to remember that they stem from that basic method, strategy Michael is teaching you every morning for 2 hours. I was in a mentoring session yesterday with someone. He said, you know, I just don't feel comfortable asking questions when Michael's taking off trades. I don't want to interrupt him. And some of my questions are so basic, you know, candlesticks, and when you say it closed here, you know, what exactly does that mean? And I said, you know what? We will help you with those things as well. In fact, Valerie is very good at that. I think she's put together a couple videos, some very basic things. And if you've traded in the past, if you've traded stocks perhaps, there's a whole different way of trading stocks as compared to futures. And that's what we specialize in, are the Emini Futures and gold and crude and others, some currencies. Okay. Now, when you get ready to sit down and trade stocks, you've got a universe of like 8,000 stocks to choose from. I remember back in the early 2000s spending hours and hours and hours every night handicapping these different companies to try to figure out which one was going to be the big mover the following day. That's pretty grueling work. Some people enjoy it. Hey, if you enjoy it, if it's a hobby, I don't want to say there's anything wrong with that. But futures brought us into a world where things were just so much simpler. S&P 500, that's 500 companies, 500 large cap, high grade companies. They've gone through a long list of requirements by the board over at Standard & Poor's to qualify them. This past week, we saw, what was it, 3 companies leave the Dow and 3 get added, I believe it was. So I'm just trying to give you a background of futures or equities. I won't go into all the reasons for futures today because it's a pretty lengthy list, but you're able to go short or long, 5 minutes apart, 2 minutes apart, if that's what the chart calls for. You're not tied to a time clock. If you trade stocks, basically your work hours are 9:30, your actual trading hours are 9:30 a.m. to 4 p.m. Eastern. Rest of the time, well, that's when you're doing all that research, handicapping all those companies, trying to figure out which one's going to make the move. With futures, you really narrow the field, but it's quite a variety that you have to choose from. And the thing about our strategy, not only is it simple, but it is fluid across all the different markets. That's why in the morning when you're watching Michael as he's training you, he can move from the S&P chart to the NQ chart, or he doesn't trade the NQ, or to the gold, or to the crude, or whatever chart he has up. He's able to make that seamless move because he's not having to rush in and put on different indicators or get his thinking cap on to think about some different strategy, some different way, of approaching that market because it's got a different personality. That's why some folks will tell you, well, you can't trade all markets the same because they have different personalities. Typically, the person who tells you that is the person who has, guess what, different strategies to sell you. One for the S&P, one for the Dow, one for the Russell, and one for the NQ. Price can only do one of 3 things. It's either going to go higher, it's going to go lower, or it's going to consolidate for a little bit before it does either one. Now let's look at the daily chart of the S&P. All right. We used the Fibonacci price extension tool here to compute this swing high. We missed it by a little bit. Okay, the rectangle is where Fibonacci 14th century math, not the retracement tool, but the extension tool, told us that the next area for potential resistance, because see, you can't look left up here because price had never been here before. So you got to resort to the old school math. The math told us here. We actually poked above it by a couple ticks. Now this high is one tick lower than this high. And that's the very first thing that makes you think, if we can only go, or if we can't take this out. Oh wait, let me see. Let me get these 2 days right. This high was 56 or 76. And this one, come on. Could I get a pop-up? Oh, boy. There you go. 76 and a quarter. Okay, 76, 76 and a quarter. The fact that it could only go one tick higher, that was an indication that there's weakness here on the part of the buyers. And in one day, one fell swoop, we went all the way back to the BBC. Price always reverts to the mean. As long as price stays on the left side of the step line, and additionally the left side of blue and climbing, okay, you should be long or looking for a little pullback that enables you to get long. It's not until price gets below that step line, below that blue and climbing, and you know when blue and climbing is about to become red and falling, because it does that. Just like down here. See, red and falling kept running into resistance at red and falling. Price kept running into it. Day after day after day after day after day. It's like that red and falling was just ratcheting it down, until red and falling gets to the BBC, trades just slightly below it, and then what do you know? Price is back above the BBC. We've now got blue and climbing, and price just climbs the back, and all the way climbs the back of blue and climbing, and along the way it reaches down, confirms support at the BBC, off again, back to the BBC, off again, back to the BBC, off again, back to the BBC. This time, okay, on this candle we would say that's still holding, still holding, still holding, still holding. This candle opened below the BBC and closed below the BBC. From there, the high probability move at that point, even though we came very close to that 50% fib, the next logical move would have been back down, because we closed red on the session, would be back down to that 50% fib. And the fibs on this chart, on the daily chart, go from the low put in on June 29th. That was the beginning of the up leg. The high came in on September 3rd. This retracement low came in on September the 9th. Now, price just came up against resistance times 2. Red and falling represents resistance, just like you saw it over here, and like you saw it yesterday. But now price, I mean, the bulls are serious about their positions. They have got us back above the step line. They've got us back above red and falling. They've got us back above the BBC. Okay, so if we close positive on the session today, and then tonight we open above the BBC, then we're going to have a pretty big window of opportunity. Once we get above this 24% Fibonacci retracement, we have a window of opportunity to get above those highs right there. Then this is really only 2 candles. And so from roughly 34, yeah, we'll call it 34.55 up to 35.35. Is that about 80 points? Okay, that's the potential we have overhead. Now, if things turn out different, because right now, this pull back to the BBC is still holding. Just like up here, when we pulled down, still holding, still holding, still holding, still holding. Now we've got the reverse of that. Okay, we could potentially see a couple days of consolidation where we're still connected to the BBC. What we want to see is a close above it, and then a candle open above it on the daily. Okay, and then as we take out these highs, we want to be thinking long. Yeah, kind of like that. We'll tighten it up. 34.86 up to 35, yeah, 46. It's about 60 points. Let's go up 34.90. Yeah, about 50. It's about a 50-point move. At $50 a point, that's $250 per contract traded. So Michael teaches you on a range chart for 2 hours, which is a very fast chart, so that you get to see this over and over across all the different markets that he trades. Bullish cross, price pulls away, price pulls back, up close, go long. Price pulls back, up close, go long. But you see, if we were doing the training room on a daily chart, you wouldn't see a trade setup every day. Even if we were using my go-to chart, the 30-minute chart, you would not necessarily see a trade every day. So we use that fast range chart because it allows you to see everything about the methodology and the strategy that you need to learn. Now, you should be trading along with Michael in the simulator, okay, in the demo account. No, you're not going to be able to keep perfect pace with him. There are going to be times when he gets his target and you don't, okay? Don't even think about that. Don't worry about that. Your goal in being in that room is to learn what he's doing and why he's doing it. Because once you understand that, what he's doing, why he's doing it, and what the anticipated outcome is, now you'll be able to sit down and look at a chart with no help from no one else. You'll be able to see it the same way that we see it, think about it the same way that we think about it, and then ultimately trade it the same way that we trade it. So as he's teaching you the strategy for 2 hours every morning, we are also sending you out via Telegram alert channels both the Logic 247 alerts and the Concierge Trade Alerts. Now, the Logic alerts are based on current price action. Okay? That means what's happening right here, right now. We also have the Concierge Trade Alerts. Okay? Now, we're in week 111 of Logic 247. Concierge Trade Alerts, we're probably closer to year 7 or something, I think. Concierge Alerts are based on historic price action. They're delivered as a static report shortly before the Globex Open each evening. So right after the Globex Open, you get a message in the Concierge Trade Alert Telegram channel, and you want to go to your charts and you want to put these lines in the sand, okay? There's a bullish line and a short line, a bearish line for each one of the markets that we do CTAs on. Obviously, when price reaches the bullish line, you want to be long and or thinking long. And if it reaches the short one, you want to be short and or looking for short trade setups. Okay. The other thing that you'll see on the charts are the weekly trading zones. Those provide fixed support and resistance levels for the entire week. We've been publishing the zones since December 14th, 2009. that come out to our traders every Monday morning at 6:15 a.m. Eastern. Once you have those, it's a good idea to get them on your chart before Wall Street even wakes up. Only 3 things happen at a weekly trading zone. The most common thing to happen is hang on, let me get my chart up here. There we go. Okay, there we go. All right, so let's go to the S&P first. All right, last night or yesterday afternoon, whenever it was, I had put on the chart this area. I had highlighted this area as potential resistance, this area as potential support, because price was, as I recall, right in this area. So price is always on a mission. It's always trying to break something, a previous high, previous low. Just depends upon who has the ball, who's in control. Obviously, we can see here that buyers have the ball. They've been taking it up the field quite nicely today. We got a bullish cross this morning, or last night, right about midnight. We put in a nice leg, and we retraced to the BBC. Just like on the range chart that Michael teaches you, bullish cross, price pulls away, price pulls back, up close. Here's a long at 33.84, and then this week zone right overhead is 33.93 / 33.94. And as price continues to climb, it reaches back, tries to confirm support at the BBC, but there's enough momentum in the market that it wasn't actually able to accomplish pulling all the way back, but price continued to rise. And so in pointing out this potential resistance yesterday when price was down in this area, this was the window of opportunity that took us up to potential resistance. So here comes price walking the back, the blue and climbing, and it climbs, and it climbs, and it climbs. And the swing high here on this candle was 33.87, and the swing high here was 33.90. So that little wick did take out that potential resistance by just a bit, but it was enough resistance to send us back in search of support, which we found at the BBC. And then once price gets back above blue and climbing, then you've got a very nice trading opportunity from 33.90 right up to the zone, or 91 right up to the zone at 93. From here, the next high probability move is we can see that all of these wicks across here are potential resistance. Price goes up, it gets slapped down. Goes up, slapped down, up, slapped down. We need price to get above this swing high. And I believe there is an alert in the channel right now. Let me look. Alert in the channel right now for 34.12. 34.12 to 34.14. That's a last week zone at 15.16. Now after 33.93.94, which is a this week zone, this here was a last week zone. We don't have another this week zone until we get way up here at 35.05. That is the highest weekly trading zone for this week. Okay. Now, the concierge, or let me give you the logic recap, and then we'll do the concierge. Okay, on logic, these are the ones based on current price action These are the ones. I was just showing you the alert. As of 12:15 today, we're in week 111. We've issued 24 alerts total. 6 of them never triggered. 4 still waiting. That's 14 actionable alerts. And 2 of them have been stopped out. So 14% of actionable alerts stopped out. Now, earlier this morning at 8:45 a.m., Valerie did a recap. We had 19 total alerts, 6 never triggered, 13 actionable. 2 had been stopped out, 15%. So 14%, 15%. Neither one of those are typical numbers. What we average each week with Logic 247 is 30% of all Logic alerts do get stopped out based on not risking more than $300 per contract per trade, and less when possible, based on market structure, which is just a simple 3-step process that I teach all of our traders. So instead of using a formula or a fixed number or a percentage of the ATR, we just observe the chart. We observe price action. We look at the market structure. And the chart shows us where the stop loss needs to be. If that turns out to be more than $300 per contract per trade, then we go to step 2. And if we still don't qualify, we go to step 3. And if we still don't qualify at step 3, then we just wait for the next trigger. Because important prices, important areas are almost always tested. So once an alert triggers, there's a high probability that it will trigger again, okay, during the same session. All right. So now the concierge alerts from last night. This is the report that comes out at the beginning of the session. If you want to grab a screenshot, you can. Last night, 7:30 p.m. Eastern, S&P, Dow, Russell, Crude, NQ, gold, and silver. And the quickest way I know of to grab a screenshot, at least for me, is I use, it's built into Windows 10, it's called the snipping tool, and you just say new, hit your mouse, hover over whatever it is you want to capture, drag across, release the mouse button, and now you have a portable image, which if you right click it, you could send it as an email, you could copy it to your clipboard, send it as a Telegram message, save it as a file, anything at all you want to do with it. So back to the S&P. The Concierge Trade Alert for last night was to be long 33.82, and that's going to be right here. And this is where you'll see what I mean about important prices, important areas. Let me get these out of the way. They're kind of cluttering things up. So 33.82. Okay. So price triggers, puts in a swing high up at 33.90 and a quarter. So that's an 8-point move at $50 a point. That's $400 per contract traded. Now the goal of our 24/20 blueprint is designed to take you from 1 to 20 contracts over a period of 24 months. How we do it is a little different than some others. First, we want you to put together 10 days in SIM in the demo account where you reach your goal in 10 trades or less before you put real money to work. Okay? It's the smart way to build your business. Once you have accomplished the 10 days, the blueprint will give you the green light to go live with one contract. Then your goal is to increase your account balance by $2,000. Once you accomplish that, the blueprint will tell you it's time to add a second contract. The big difference with the second contract is you're adding that contract and every other contract with profit you earned in the market. Not going back to your savings, not going back to the 401k. You're profitable. You made your goal in the sim, and you made your goal with one contract. Now you're trading two contracts. Now, while this move did go 8 points, some of you have a goal of just 2 points a day. So is it possible to just take your 2 points out of an 8-point move? It is. Is it possible to stay in that 2-point move and get a little more than 2 points out of it? That's certainly possible too. And you see Michael do that in the mornings when he trails his stop. But as long as price is hanging out up here above blue and climbing, okay, and above the step line, okay, there's still a bullish sentiment to the market. So again, important prices, important areas, almost always tested. So what do? We get back below the trigger. We find support at the BBC. We trigger again. And now we've got a swing high up at 34.09. So 18 and 9 would be 27. So 27 times 50. It's $1,350 per contract traded. Okay. Now, if you've earned the right, if you've gone through the process, if you followed the blueprint, if you actually earned your way up to trading 10 contracts, then this same move that was worth $400 per contract would be worth $4,000 per contract. This $1,300 move per contract would be worth $13,000 per contract. So the future is bright, but only if you can exercise the necessary self-control and self-discipline to take things one step at a time, not try to run to the head of the line, not trading a bunch of contracts just because you have the money, because if you do, pretty soon you won't have the money. And I'm telling you this, and I have facts to back it up. 9 out of 10 new traders fail. Why? Because they don't have a teacher. They don't have someone to actually tell you the things that I'm trying to tell you and explain to you now. And everything that we teach you, it's not based on some mystery, some secret. It's based on logic. Price is always trying to get to a weekly trading zone. Either the one above or the one below. How do you know? Well, the way you know is where is price in relation to the BBC. If it's above the BBC, it's trying to get to the zone overhead, which it did. Now, as we pull back to the BBC, we expect support. We got support, but we ran into trouble at red and falling. So it wasn't until here that price managed to get back below the BBC. We expect lower prices, but we never get a move on to the downside. Price immediately is back above the BBC. You're below, you're above, you're below, you're above, you're below. You gotta wait, okay? This is consolidation. This is the market transitioning. We had a down leg. It's now transitioning into an up leg. And what a beautiful up leg it was. Okay. Now that was the concierge alert. Of course, there was a Logic 247 alert to go right along with that. And we'll scroll through those in a bit. On the Dow, the alert was to be long 28025. 28025. Okay. And 28025 is about right there. Okay, see the red line on my cursor? So you'd have triggered in about right here. Okay, so 28025, we get a swing high at 128. So basically it's a 100-point move at $5 a point. That's $500 per contract traded. Now the S&P just offered us two nice trading opportunities. The Dow, it triggered once, okay, at 28,205, right there. However, when it triggered again, we would not have wanted to take that trigger because you'd be going long right into resistance. You've always got to think of that red and falling overhead as resistance, and see what happened? Red and falling, just like it did here, just like it did here, here. It walked it right back down to the BBC. Now, one of two things will happen from here. Price will close above the BBC, above red and falling, and we'll make a run at these swing highs. So we'll have a long trade. If price drops a little bit lower, and see these lows right across here? If price can get down to about 27,910, then we have an opportunity down into this area here at about 27,870. Again, it's all logical. Price is trying to get to a weekly trading zone. As long as it's above the BBC, it's trying to get to the zone overhead. When it's below, it's trying to get to the zone below. But right now, this pullback is undecided because we're still attached, we're still touching, joined at the hip to the BBC. So, what's it going to be? I don't know. No one does. No indicator, no oscillator, no man or machine can tell you with certainty what's going to happen next. But we do know what the next high probability moves are. Number one, we got to do a little work. We got to overcome these obstacles. Then we have a window of opportunity up to these highs. Or price drops, gets away from the BBC, takes out this little area of support right here, and then we have a nice little window of opportunity down here. The thing you want ingrained, the thing you want in your head over and over is bullish cross. Price pulls away, price pulls back, up close, price pulls back to the BBC, up close, and off you go. And I know it can't be that simple, but wait, there has to be more. There are some nuances, there are some fine points, there are things that you'll be drawn to and attracted to, and things you may see that we might not talk about. And that's great. That means you're growing as a trader. Looks like an exit signal, 2 pars back on the ES. Okay, Fred, let me take a look. Now, on the ES, Fred, from, well, here's the thing. From 28,025, we made it up here to the target at 28,095. Okay? Now, the exit signal, if you're talking about this being the exit signal, that would have been below the actual entry. So what we need to be able to use the exit signal is we need more of an extended move, kind of like what we had here. On this move, this was the gap open Sunday night. Saw we were moving higher, and then the step line gets on the right side of blue and climbing. Then price starts to walk sideways. The first red candle that closes below the step line, okay, That's your exit signal. And we had an entry in here somewhere. I forget what price exactly it was. But that would have been the exit signal. This one did not give you a good exit signal because the move itself just was not extended enough. It got from here just to here and then started to roll over. Hold on for me just 1 second, guys. I'll be right back. Okay, Fred, I see. Sorry about that, guys. Fred, Caesar, your question, do you use volume in any way on your trading destinations? No, actually we don't. I know that some people do. And I did find volume an important factor back when I was doing stocks, equities. But the nature of futures, no, I have not found it to be beneficial. I have looked at it. And again, some people do find it beneficial, and to anyone who does, I salute that, and I don't ever want to get in the way of anything that someone has found useful that is helping them. Okay. Okay, now, Fred, your question on ES, you're on the YM. Oh, so let me go back to the ES. I'm sorry. Okay. So on the ES, yes, you're right. Good eyes. That would have been the exit signal. Right there. The price stays on the left side of blue and climbing. Step line has crossed over to the right side. So that itself shows you that the market is starting to run out of steam. And so what you're looking for is the first red candle that closes below that step line. Okay, that's what you're looking for. Good eyes, Fred. Okay, guys, I apologize. I'm gonna have to take just a tiny break. Give me 2 minutes. I'll be right back. Sorry about the break. Try to keep those to a minimum, but sometimes life happens. Okay, so you were correct, Fred. That was an exit signal. The exit signal would be 3401.75. Check it. The close 3401.75. $34.01.75. So if you had entered, and this really gives you a more accurate picture, had you been long this trigger and you saw that you were in an extended move, okay, and you were waiting for this, then the math would be 3401.75 minus 33.82. That would be 19 3/4 points. So 19 times $50 a point, that's $950 per contract traded. Okay, per contract. Remember, at some point the blueprint's going to tell you it's time to add contract number 2. And when that happens, the same move becomes an $1,800 move. Just don't put the cart before the horse, because it's awkward for the cart and the horse. Thank you for pointing that out. Now we have a chance here on the Dow. Our trigger, and I was going to try to avoid drawing a line, but let me just, because it takes so long. Put the line there. 28.025. Okay. So there you got it. So what we need here, we've got red and falling, resistance. So we need to get cleanly above red and falling, okay? And let's say we were to get long, about 28045. That would give us a 50-point window of opportunity up to 28095, okay? And if price breaks down, we've already talked about this window of opportunity to the downside. So anytime you sit in front of the chart, you ask yourself, where's price, where's the BBC, where are the weekly trading zones? Once we get back above the BBC, then we know price is trying to get to that zone. With price below the BBC, it's showing a desire to go to the zone below. But obviously, buyers at this point are far more committed to their position than sellers, because it looks like they're about to take us right back up through the trigger. Okay, now as the price moves higher, probably by the time we get a second candle, what you're going to see is that this red and falling is going to turn just like it did here into blue and climbing, and that's your support. You just walk the back of blue and climbing right up to that zone overhead and these previous swing highs. Okay, so that's a little window of opportunity. We'll put just right there. Okay. Okay, Fred asks, so re-entry in the first close above the BBC. Let's see. Well, in this case, Fred, I would, excuse me, I want to get above the, resistance that is created. Let me just move that there. Spin this around. There. See, these previous swing highs, price could not get through there. So we need price to get through that area. That's why the alert in the channel right now says to be long 34.12. to 34.14 on up. You can see the alert. It's right in the channel. Okay. So yes, it's a close below the step line after the step line gets on the right side of blue and climbing. Here, price is trying to remember that on this 30-minute candle, buyers tried valiantly to take us higher. That swing high was 34.09. That swing high was 34.0875. So we want to see price clear this area, 34.12, and then you got a nice little 2-point trade up to 34.14. So hope that helps. If not, just ask another question and I'll be happy to answer. Okay, on the Russell. Last night's alert for the Russell was to be long 1542. And that's going to be right up here. $5.15.42. $15.42, we put in a swing high up at 49. That's 7 points, $50 a point, $350 per contract traded. And then on this pullback, of course, no exit signal here. Number one, price just never pulled far enough away. We didn't really get an extended move. This thing just slammed right back down on us. Now we've got a weekly zone right below us at 39/40. So that adds another dimension. So 39/40. And then this is a last week zone. So I'm going to just pull that down to 15.15, which lines it up with this week's zone, 15.15 to 15.16. Okay, now the next zone overhead after 39.40 is way up at 16.04. Now, as Michael and I were talking earlier, we've got some major economic news events coming out that could sway this market in either direction. Depends upon how the numbers come out, depends upon how they spin it. Now, you see this swing high right here? We're still on the Russell. Price got triggered, got back below the trigger, triggered again. So on this one, it ran up to 47, so that's a 5-point move, $250 per contract. Now the issue here is you're right at red and falling. So is that going to continue to exert downward pressure? The window of opportunity that I see here is right there. From 45 up to 47. Or you could even go 44.5 to 46.5. That's 2 points. $50 a point. Okay. That's the Russell. Okay, let's go to the NQ. All right. Last night's alert for the NQ was to be long 11.326. second. I'll fix that in a minute. Okay. So on the NQ, considering along 11,326. Basically, you had to be there, and you had to put the trade on. Okay. Now, there's an exit signal actually right there. It's a red close below the step line on the right side of blue and climbing. From 11,326, we had a swing high up to 468. So 468 minus 326 is 112 points. The NQ pays $20 a point. So that's a $2,240 per contract move from here to here. Now the exit signal price would be 11,418. So if you're waiting for the exit signal on this one, we take 418 minus 326, 92 points, $20 a point. That's an $1,800 per contract move from the published entry to the exit signal where the chart tells you this move may be running out of steam. Now, is the exit signal always definitive? Well, obviously in this situation, no. In fact, a couple more ticks and this would have been a green close and you would actually just still be in the trade heading for this zone overhead at 507. Okay, let's go to crude. Crude threw a little party. All right, the alert for crude. If you didn't get a chance to grab the screenshot earlier, here it is again. Okay, so there's crude long at 37.50. That happened right here. This is another example of important prices, important areas, almost always tested. 5, 37.50. You got a swing high at 38.02. So basically a 50-cent trade, 50 ticks at $10 a tick. That's $500 per contract traded. Here, you get back below the trigger. Unfortunately, you're triggering right into red and falling. So you don't want to do that. You've got to wait for price to do what it did here. Close above red and falling. Okay? And now you have an opportunity to be long from 37.80-ish up to 38.40-ish. That's about a $600 per contract move so far. And it does look like it wants to continue heading up to the next zone. And actually, the next zone for this week is 38.50. So if you're long this move, this would be a good opportunity to take profit because when we approach a weekly zone from below, we expect it to be good resistance until proven otherwise. Okay. Here, only 3 things happen at a weekly trading zone. Consolidation is the most likely thing. Second most likely is rejection. Third and least likely is the slice. Okay. Don't see it a lot, but it does happen. And when price slices through a zone, it will typically retrace to the zone it sliced through. In this case, it pulled all the way back to the BBC, got just below the trigger, and off it went again. So that's the S&P, the Dow, the Russell, the NQ, Crude. Well, let's go to gold. Gold. Here's gold. All right. So last night on gold, the alert was to be short 1959. Which happened here. It was down to the zone at 57. It's $200 per contract traded. It actually triggered once, triggered twice, and then these ensuing triggers just didn't really go anywhere. The swing low here was 58.5. The entry was 59. The long side, okay, was 1969, which happened over here. I say that pullback, how it didn't quite get all the way back to the trigger. So from 1969 up to this week's zone at 73. From 69 to 73, that's $400 per contract traded. Now we got a pullback, we consolidated at the zone, we got above red and falling, and then we had a nice move up after we took out this swing high. This candle ran from basically 1977 to 1982. We had a bearish cross. Price pulled away. Price pulled back up to the BBC. When price approaches the BBC from below, we expect it to be good resistance. So from here, the next high probability move would be another leg to the downside. Leg, retrace, leg, retrace, leg. This time we got a deeper retracement. In other words, we took out that low. See, here you have a low and then a high, and now you have a higher low and then a higher low. Here you have a high, a higher high, and a higher high. If this trend were going to remain intact, we would have had another higher low. But once we took out this low, that means we can't have a higher low because we now just put in a lower low. We're back below the BBC. So now our thoughts have to turn to being short the market. Okay? And remember, everything in between these two lines is the market still trying to make up its mind. Now for this one, as price comes down the step line at 64.5, that could potentially be support. If we can get below the step line, 1963 down to 1962, 1963 to 1962 to 1961. Well, but couldn't you just short it right here at 64 or at 65? You could. You absolutely could. You could put your stop loss right here, but you're accepting the fact that you have a known obstacle in your path that could become support. So again, you could short it from right where it's at now with a very tight stop, knowing this could become support, but if it fails to be support, then there's nothing in your way for price to continue dropping down to here, okay? And by that point, even if it's still red, it will be, instead of on the right side of price, okay, it will be below price. That means it can act as good support. Silver. Last night's alert for silver was to be long. 27.45. Should be in here somewhere. Yeah. Remember, a $1 move in silver is worth $5,000 per contract. 527.45. Okay. So from 27.45, we put in a high up at 54. So it's at 9. It's about $450 per contract traded. Get back below the trigger. Okay, this one's a little bit iffy. You got blue and climbing overhead, but that's the key. It's directly overhead. And even though it hasn't changed to red yet, because of the structure, we can see that it is on its way to turning red. So we know that that's potential resistance. Price pulls back to the BBC. Price always reverts to the mean. Now we close back above the trigger. Now we have blue and climbing to support us. And so from 27.45, we go up to the zone at 27.78. So 78 minus 45, that's 33 points. It's basically $1,500 per contract traded. Now after that big move, tried to do it again. Price pulled back, but it couldn't get all the way down to the trigger because it caught support right here at the BBC. Now coming up off the BBC, you're staring down the barrel of red and falling, which you know can be resistance. So the idea here is to let price get above those swing highs. Now you got a clear shot from 27.70 to 27.78. It's about a $400 per contract move. The short side for silver was 26.19. And that's way down here. $26.19, and it's middle of the week, so I'll clean all these charts up so they show just this week's zones by tomorrow. That's 26.19. Okay, so we covered the S&P. See, we still got that consolidation going. Okay. Blue and climbing is now blue and above. Okay, and that can act as resistance, just as it's done here. That alert we have up above, that remains good, 34.12 to 14 to whatever else is in the alert. But before that can happen, price has to get above this area of resistance. And we don't want to consider any short trades right now because price is above the BBC. The Dow, kind of quiet, still in that same position. Crude, still consolidating up at that zone. NQ, still climbing. Looks like it really wants to hit that zone. It's just got to take out this swing high and then not much else in the way. And the Russell, it's got to get it got above the BBC. It's got to get above red and climbing. So nice little window of opportunity here before we run into what will be potential resistance. And that's the whole idea, is finding these areas, short or long, where price can move from point A to point B, from support to resistance, without running into an obvious obstacle. Now, an obstacle can pop up anytime, anywhere. Somebody can show up with a lot of contracts on the bid or a lot of contracts on the ask. You never know when that's going to happen, and don't worry yourself trying to know it because you can't know the unknowable. Focus on the things you can know. That's where you spend your time. That's where you spend your treasure. Understanding what you can know, learn what you're supposed to do, when you're supposed to do it, and then simply do that. Nothing else. Nothing else. Okay? All right. And another quick peek at Logic 247 for the week. So far, week 111 as of 12:15, there's been 24 logic alerts. There have been Sunday nights when we had 24 alerts. It's all based on the opportunity that the market presents. 6 of those never triggered. We're waiting on the results of 4. 14 actionable alerts. 2 stopped out. So that's 14% of actionable alerts have been stopped out in logic, which is slightly less than normal. We average 20% a week. And that's based on not risking more than $300 per contract per trade. Okay. Now, let's go to our good word for the day. Garrett was trying to join us today. I guess he wasn't able to get logged in. John's still under the weather. Keep him in your prayers, if you would. Yesterday we talked about finding your place in the body of Christ. 1 Corinthians 12:18. God has placed the parts in the body, every one of them, just as he wanted them to be. Do you feel like joining a different church where people are more like you? A team of missionaries went to Kenya and were being driven across the plains to their destination by a tribal escort. En route, their attention became riveted on the herds of wildebeest and zebras migrating together. Their escort explained why 2 massive herds of such different species would travel together. He said that while wildebeest have poor eyesight, they have a very keen sense of smell, whereas zebras have good eyesight and a poor sense of smell. So you see where this is going. Together, they are much less vulnerable to attack because their differences compensate for their weaknesses. Such is the body of Christ. Paul writes in 1 Corinthians 12:17, if the whole body were an eye, where would the sense of hearing be? If the whole body were an ear, where would the sense of smell be? That reminds you of those zebras and wildebeest, doesn't it? When we join a club, we usually choose to be with people who are more or less like us. In fact, we go on Facebook and we search keywords, and we find groups of people all over the world who have a common interest in something that we're interested in. And so, by the power of the internet, there's good and evil out there. Some of it is good, okay? So you're able to get into relationship with people who have a common interest with you. Things weren't quite so simple back in the biblical days. But membership in Christ's body throws us together with people who are as different from us as a hand is from a nose. And while those differences can rub you the wrong way at times, they are differences God designed to benefit you. Zebras and wildebeest don't have to like each other, but their survival and success depend on getting along together. Your spiritual growth doesn't depend on agreeing with everybody, but it does depend on loving them enough to live together agreeably. That's our good word for the day. All right, thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.